Deal architect in real estate investing. Definition of a deal architect. A deal architect in real estate investing is a strategic professional who specializes in designing, structuring, and executing creative and complex investment transactions. Rather than simply finding or financing deals, a deal architect engineers the entire transaction framework, incorporating innovative financing, strategic partnerships, legal structuring, and value creation methods. Core responsibilities of a deal architect. 1. Creative deal structuring. Crafting unconventional financing solutions such as seller financing, subject to transactions, wraparound mortgages, and lease options. Utilizing combination funding strategies that blend private money, hard money, and institutional financing. Structuring joint ventures, equity partnerships, and syndications. 2. Transaction engineering. Analyzing and reverse engineering deals to maximize profitability. Integrating legal frameworks such as trusts, LLCs, and land contracts to optimize tax benefits and protect assets. Leveraging contingencies, addendums, and escape clauses for flexibility. 3. Funding and capital stacking. Identifying and negotiating with private lenders, hard money lenders, and institutional partners. Utilizing gap funding, transactional funding, and bridge loans to secure deals. Optimizing leverage and creative equity strategies to minimize upfront capital requirements. 4. Risk mitigation and compliance. Performing due diligence, market analysis, and feasibility studies. Structuring deals with contingencies and risk buffers. Ensuring compliance with real estate laws, contracts, and lender requirements. 5. Exit strategy planning. Designing multiple exit strategies, wholesale, flip, rent, refinance, to maximize returns. Implementing profit-sharing structures and waterfall provisions for joint ventures. Ensuring scalable and repeatable deal structures for consistent portfolio growth. Key skills and traits of a deal architect. 1. Financial acumen, expertise in deal analysis, underwriting, and cash flow projections. Then proficiency with financial modeling tools, calculators, and Excel-based analyzers. 2. Negotiation and deal-making. Mastery of negotiation techniques to secure favorable terms. Ability to bridge gaps between buyers, sellers, and lenders. 3. Creativity and problem-solving. Innovative thinking to structure non-traditional financing solutions. Skilled at overcoming deal obstacles through creative structuring. 4. Legal and contractual knowledge. Understanding of contracts, addendums, disclosures, and contingencies. Experience with entity structuring and asset protection. 5. Market and deal analysis. Proficiency in comparable market analysis, CMA, and use of tools like Privy.pro, PropStream, and Rent-A-Meter for deal sourcing and analysis. Deal architect strategies in real estate. 1. Creative financing techniques. 1. Subject to transactions. Acquiring properties by taking over existing loans without assuming them. Reducing upfront capital needs and securing low-interest financing. 2. Seller financing. Structuring deals where the seller carries the note, allowing for flexible terms. Reducing dependency on third-party financing. 3. Wraparound mortgages. Using a new mortgage that wraps around the seller's existing loan. Profiting from interest rate spreads. 2. Capital stacking and hybrid funding. 1. Private money and hard money. Using short-term, asset-based funding for fast acquisitions. 2. Gap funding. Sourcing capital to cover down payments, rehab, and closing costs. 3. Transactional funding. Short-term financing used to facilitate wholesale double closings. 4. Crowdfunding and syndication. Pooling funds from multiple investors for larger projects. 3. Value add and forced appreciation strategies. 1. Fix and flip rehabs. Improving property conditions to increase market value. 2. BRR method. Buy, rehab, rent, refinance, repeat to build long-term wealth. 3. Converting use or zoning. Changing property use, e.g. residential to multi-use, to increase value. 4. Creating additional income streams. Adding ADUs, storage units, or short-term rental opportunities. Case studies. Deal architect in action. Case study 1. Creative acquisition with subject to and seller financing. Scenario. A deal architect identifies a motivated seller with $200,000 in remaining mortgage debt on a property worth $275,000. The seller is behind on payments and eager to walk away. Deal structure. 1. Acquisition. Subject to takeover of the existing $200,000 mortgage with a 3.5% interest rate. Seller agrees to carry a $50,000 note at 0% interest for 24 months. Architect pays $5,000 in cash to the seller at closing. 2. Exit strategy. Performs light rehab and refinances the property based on its appraised value of $300,000. Secures a new loan, pays off the seller's note, and retains the property as a cash-flowing rental. Outcome. 1. Acquired with only $5,000 cash out of pocket. 2. Secured long-term financing at favorable rates. 3. Created instant equity by purchasing below market value. Case Study 2. Capital stacking for a multifamily acquisition scenario. A deal. Architect targets an 8-unit apartment building listed for $950,000. The property needs $100,000 in repairs, but will be worth $1.3 million post-renovation. Deal structure. 1. Funding sources. Hard money loan for 80% of the purchase price, $760,000. Private money for rehab and closing costs, $200,000. Gap funding of $50,000 for the down payment. 2. Exit strategy. Post-rehab, refinances based on the appraised ARV of $1.3 million. Pulls out equity and repays private and gap funding. Outcome. 1. Acquired the property with none of their own capital. 2. Created $250,000 in forced appreciation. 3. Retained the property as a cash-flowing asset. Tools and resources for deal architects, software and platforms. 1. Privy.pro for sourcing and analyzing off-market deals. 2. PropStream for property data, comps, and lead generation. 3. Rent-A-Meter for rental market comps and cash flow analysis. 4. Excel-based deal analyzers. Custom analyzers for fix and flip, BRRRR, and multifamily deals. Key contracts and documents. 1. Subject to purchase agreements. 2. Seller financing contracts. 3. Promissory notes and deeds of trust. 4. JV and equity partnership agreements. 5. Gap funding agreements. Conclusion. A deal. Architect is more than just an investor. They are a master strategist who creatively structures real estate deals for maximum profitability. By leveraging innovative financing, capital stacking, and value-add strategies, they transform traditional transactions into highly profitable, scalable investments. For investors looking to enhance their deal-making skills, adopting a deal architect mindset allows for more flexibility, reduced capital exposure, and increased returns, essentially turning complex problems into profitable solutions.